365, shake my hand, ladies and gentlemen, and welcome to another amazing video. This is asset number 6 in our long list of long wave analysis on these assets. I am back. 365 is back. We actually never left. We just took a good break, clear the mind, get rid of the clutter, a zoning introspection, right? And I encourage you guys to do this kind of stuff once in a while, just to completely unplug. This year is going to be a massive holistic health and wealth, mental and bodily journey for me. I'm not those guys who do vlogs, so I might not be sharing the everyday type of things, but it's really something I'm looking forward to doing, and I'll keep you updated, especially on how it impacts and affects trading. But right now we're doing short analysis on these 109 assets that I normally look at from a swing position year after year, that I'm generally very much in charge of. Normally I've got my finger on the pulse, but because I've been away, I've said this on the Euro USD video. If you haven't watched that, please note I'm making this video today on the 14th of November, and the Euro USD video is finally out. The first video on the channel of 3 hours ago at the time of today's recording, the 14th, right? And you're going to find all these videos in our new playlist called Asset by Asset Analysis, right? So all these videos are really meant to be short. I mean, one day I'm hoping to be like 1, 2, 3 in 10 minutes, but so far the videos last for about 20 minutes. Please stay through till the end. Like the video and just hit me up on the comment section and let me know what's cooking, right? So it's nice, right? Because I've done Euro USD first, Pound USD, USD JPY, and USD ZAR, Euro ZAR, and today I'm doing USD Swiss franc within about 48 hours. And 48 hours ago, let's see, about 3 days ago, I think I was doing the Euro USD video, the very first time I did the recording. I only released it today because I now have a few more videos to kind of like punch out. If you watch this video, if you watch this Euro USD, which I encourage you to start with, you always start with the most liquid asset in the markets because it gives us direction about where analysis has already removed a daily supply, right? And that's important because if you listen to what I'm saying in Euro USD, I'm telling you that, well, there is some confluence in the market about, a weak dollar, strong euro, and long-term analysis is starting to pay off, right? So we were seeing Euro USD move forward. Of course, these are zones that we have marked up. If you're a swing trader like me, like I told you, these were very clean zones. And so some of the trades that I'll probably share my trading balance sheet at some point in time just to keep us, honest and live account and all that kind of stuff. So if you see any 2023 profit trades, just remember that I'm a set and forget trader, and some of these pinning orders were set last year, right? So this is a 2022 demand that played off in January 2023, and currently right now it's given about a 1:4, almost 1:5 risk to reward ratio. With the weekly target somewhere up here, you take profit, probably get out of. But this we saw coming in December last year, right? So, good to be back, right? So again, let's try and keep this video short by, cutting down on the interesting Swiss franc is the video of the moment, right? Same thing. I'm going to do the same thing 109 times. You're going to see me do the same thing so many times. Hopefully it will reinforce something in you. Systematic mechanical trading, number one. Number two, it will also reinforce the fact that supply and demand has been the same since 1960s, 1950s, 1930s, during the First World War, from the beginning of time with capitalism and markets. And number three, if it's been the same and you can master it, you can equally benefit from it, right? So here's an ugly chart. By all measures, this is a disgusting, ugly chart. Terrible levels. Obviously, it's a downtrend. It's a sell asset. USD and Swiss franc are massive foes. Swiss franc only benefits at the behest of the dollar. Swiss franc is the fourth last version of what we could consider as a safe haven currency, and the dollar, as you know, is a big safe haven currency. And so this is just literally, what you're looking at right now, right? So the chart we have in front of us goes back all the way to 1972, 71, which is good enough. I am on the 12-month chart. One candlestick represents 1 year, one full year equal in one candlestick, right? So it's quite a lot of years that are in front of us, and I want to note clean data like this. I want to understand what's going on, in the long term. Positional trades. Positional is banks. Banks trade positionally. Institutions trade positionally. That is long-term holdings. I'm talking 5 years, 10 years, 15 years of controlling a trend. On H5, today, sell tomorrow. The daily, you can be buying for 3 days, selling for 3 weeks, etc., etc. But on the 12-month chart, you get to see the whole picture. And positional traders will hold price in one direction for years, decades even. And if you have a good eye for this and the patience of a saint or a monk, you can really capitalize on opportunity that looks like this, right? So we've got obviously a sell profile asset with very, very, very ugly levels to the downside. Any type of demand that you're going to see, that's big enough, any type of, break of structure or points of structure in the structure that were taken up, you will notice that price was simply moving to the downside. That our big demands over time degrade, they fall apart, they break, because that has been the direction of this asset forever. All right, so not much to talk about here. I mean, I could draw some levels, but if we draw a level this high, it's not going to affect our trading for 2023. In 2023, we're here. This last year, by the way, I think I told you guys, I put out my target. I'm going to put out my target again that I'm going to hit as well. I'm not going to miss any of my annual targets for war rooms. War rooms are trade ideas that I give out for free on YouTube. But last year, the educational theme was market sentiment, understanding news events, understanding the Fed, understanding, what some people call, econometrics, right? The behind the scenes of the fundamentals together with supply and demand. This year, I want to teach the theme. The annual theme for 365 this year is sequence and alignment. I want you to understand sequence and alignment. That means there's going to be a lot of new information, right? I'm stealing a little bit from my senior trader program because I can't wait anymore. Okay, but I want us to focus mechanically on this stuff, right? Sequence and alignment, and I'll teach on this. May is around the corner, right? Now, these zones are so far away, right? So we need to understand the phase that the market is in, plus the leg in which we are trading in the phase that the market is in. You'll get it. You'll get it. I'm going to do 109 videos one by one. You will eventually get it, I promise, right? Remember, with me, there is absolutely nothing that is hard. Everything is new. And if you stopped doing it, you better start now. If you stopped doing it, shame on you, but that's okay. You can start now. Every day, in every way, I am getting better and better as a trader. If you're around me, you'll find yourself saying this all the time. My 2-year-old says it out loud. My 8-year-old says it. My partner says it. I say it. Every day and everywhere, I'm getting better and better. I wrote as a trader, right? You can put whatever you want in here. This is a direct affirmation. Get your subconscious mind drenched in that information. Let's get better, folks. Let's get better. There is absolutely money on the table, and we're dealing with the market that has not changed. Isn't that beautiful? Instead of us having to learn something new every year, we can simply looking carefully now, having drilled down, getting closer and closer to the actual place in price. Got a slide, sure. And I've got another supply there, right? So we've got some strong selling pressure. Long story short, right? This red candle here has not closed. It is very dangerous to include things that have not closed. Still have a long time before the end of the year. Remember, one candlestick represents 1 full year. So this could close green, right? Unlikely, but I can't include it now until this candlestick is closed. But lo and behold, we still have a big supply in control of this asset. I'm going to move to the the presidential chart or 3 months chart, ugly consolidation. Price takes forever to leave a zone, and forever, man. I'm talking literally years, since 2015, and price eventually came down 2019. That's 4 years of consolidation. 4 years. And retail traders who refuse to join 365 or don't want to take the link or don't want to pay for a course, and you want to master support and resistance, then do that with assets that absolutely give you maximum returns on such a low strength strategy like this. I mean, if you're a support and resistance trader, then this is the type of charts you want. You really want to maximize on this sideways movement for years. You really don't want to be trading 10 assets when you can apply your one strategy to one asset that's giving you that type of movement. By the way, most of the time, markets trend anywhere between 30 to 40% of the time, consolidate most of the time. So you can literally look for this. If you're going to be stubborn and only want a subpar trading strategy, then please try it on charts that historically will give you that type of movement. Obviously, this is long past now, right? So finally, price broke out to supply. We've just got like hidden demands here. All these wicks would eventually get filled. I can only imagine, or eventually get filled. But right now, this is also interesting, right? So markets are in between a presidential supply up here that's been overtapped. Price took forever, and then if you insist on drawing all your zones, you can get an overlay that looks like this. And then now price is also currently digging through a demand. It is very unlikely that this demand is going to hold by, say, the third financial quarter of 2023. It's unlikely. It's more likely to believe that we're selling. Even if we get a movement like this, it would only delay the inevitable, right? If it were to come back up here, would be coming back up there, which would be great, because then we really could get positional swing sales up until December or January next year. If we're to come up here, I implore you during the war rooms to remember this. When we start our war room, second or third week of May, after we're done with the one by one asset analysis that we're doing right now, to remember this, that there's a perfect sell swing, right? If you want to buy a car and you've got a good account and you want to buy the car cash, and you say, this is the account, this is the trade I'm going to take, and you calculate your risk and you leave it alone. Let money move, man. We'll talk about that stuff, basics later, right? So 3 months in, on the 3 months chart, I'm looking at a demand that's currently tagged. We can't say, normally we would say the demand is in control, but it's a sell profile asset. So the demand is currently active, but we believe that this demand will be taken out. And if it does give us a kick, it's going to be a kick to the upside, so we can continue with our selling. Given how damaged the supply is, it makes the price fresh supply for us to use in the long term for drop. Right, then we come to our main chart as retail traders, or at least retail 365 traders, which is our governing chart, which will help us understand the flow of price today. I'm going to start to tighten some zones here, right? So we've got this. This is what it looks like on the monthly. Clean breakup structure to the downside. Price maintaining, that downward drop. If you're looking for what we call confirmation trades, we get confirmation trades in supply and demand with the use of a trend line tool. Like we can see that price is really decided to break this slow formation uptrend that started in December 2020, right? And now markets are just on the other side. To the laws of supply and demand, we know that this trend line, there is no area of value in it that would be able to stop price even if it wanted. And we do not in my books, not in my module 1, not in my academy, do we then decide to agree or lie to ourselves and say we've got a valid demand on the left. We really don't. We don't have a valid demand. Let's see what we have on the presidential chart. On the presidential chart, there might be a very long-term demand, right? So it's a bullish engulfing pattern, right? So that's why that area exists. But as we get to our governor, we can see anyways that the presidential demand, by the way, on the 3 months chart, this bullish engulfing pattern was good for nothing. Right? Price really dug deep the first time. And that's where that 1 month area of value looks like a demand, because it was used already. We'll get to that yellow zone in a second. But apart from that, price is back here. How would we draw a good area of value, right? In any other instance, if you've done my module 1, you would know that you're starting to look for price here, right? You're literally carrying 6 months worth of losses as a positional trader. Retail traders could never hold losses that long. They're just not built like that. Well, most of us psychologically are taught that pain is suffering, so we let it go. You don't touch a hot stop for long. You don't hold on to losses for that long anyways. Retail traders do hold on to losses, but not for that long, right? There's that yellow zone that I was telling you about on the 3-month chart. I'm going to drop down to the 1-month time frame, and you can see prices sitting there, and that was what the climb was all about. But right now, in my humble opinion, there's nothing. There's absolutely nothing. There's really no real reason for me to believe there is a bottom here. Yes, price will psychologically lower some retail traders by their millions to start buying somewhere down here. And markets do that because when markets want to sell, they need buyers to push price up so that they can sell against the people. Just ask the Euro USD casualties who've been trying to sell that asset recently for supply here right now on the weekly, because I don't really agree that there is another supply right now. Looks like more like a PCP, but a PCP, we need another 3 months of price falling for us to say we've got a PCP here. But we're going to look at the mayoral time frame to kind of like then gauge what's going on with price, where we are. Apologies, right? So this is where we are. Please don't forget to subscribe on the channel, right? If you're watching us for the first time, please subscribe. We are back like we never left, right? So this is what it looks like on the weekly time frame. The weekly time frame, I can start to seek some clarity. So I have a peak supply here. I'm gonna keep just maybe to the body like that, and then that would be my area of competition imbalance. And then we've got 365 candle that's taught as a significant area of supply and demand in module 1. Please do check it out. Link down below somewhere, or if I do remember, but if you open the description, there should be a link, right? So there we go. There's our module. This is basic supply and demand, module 1 type of stuff, right? So we've got literally at the break of this trend line trader, where we've created enough liquidity for buy side banks and sell against retail trade, coming from a supply that is now in control. So the trend has changed. You only realize the trend has changed when the trend is broken. That's too late. If you're not a supply and demand trader and you don't understand that the supply has changed the trend all the way up here, if your first time your indicator, your mentor, your candlestick, your trading system is telling you that it's now time to sell, and you're only realizing it now after this has been broken in a live market situation, you are going to struggle maintaining consistent profitability because you don't seem to understand where price is going. All right, so now price breaks through the trend line, clean imbalance, price returns. 365 students, module 1, the first 10 lectures of our course, fresh touch, retest. Keep it simple. Man, I don't know, guys. I really spent hours lecturing on the stuff, so I know I did my best to really make the stuff clear as day. If it's not clear as day, it's because you think what took me 5 years to master, you're just gonna watch a video once and you're gonna get it right. No, you're gonna have to get the video to get equipped. Then you're gonna go back test like a religious monk until you start to see money in your bank. Back test, follow the rules. Back test, follow the rules. Don't break that system. Do it for 3 months non-stop. You start to see results. Don't withdraw. Do it for another 3 months. You start to really see some gains. Keep at it. Whitewash yourself for 365 days, 365, and you'll get to where you want to get to, right? So on the weekly time frame, we've got a clean supply that was used to break a trend. We can break off market structure. If you're into that kind of stuff, markets have then since then given us a fresh touch and a retest, and we know the retest is coming down all the way here, right? On the weekly time frame on USD Swiss franc, we can then start to now locate some short-term demands. Why am I saying short-term demands? Sequence alignment. This is not aligned with any higher time frame picture demand, except for the fact that this weekly demand is at the very bottom of the 3 months chart bullish engulfing demand. Once again, this weekly demand is not aligned to any monthly demand. Remember, we said I can't see a monthly demand. I can't call this a monthly demand not based on how I trade. This doesn't qualify as a monthly demand, but on the three lines that it's part of a bullish engulfing pattern, the very pits, the absolute bottom of the bullish engulfing pattern, where a lot of the buying power has been exhausted by sellers, right? So that's where we are with the weekly. The weekly is out of alignment with the 3 months chart and the 12 months chart. And the weekly is actually out of alignment, sorry, with the monthly chart. This is out of alignment with the monthly chart and the 12 months chart and part of a 3 months demand, which is not good enough for me to buy. Can price go up from this point? Absolutely. Have you met retail traders? Retail traders are ready to buy. They will buy. They see support all the way down here, right? So what you want to start looking for is that buy. We cannot guarantee that the buyers will get us to a supply, but we absolutely know that it is dangerous, absolutely buy on the wrong side of the trend. Right, so now I'm going to move to the daily time frame, and here I am on the daily. You can see that today is a green day as price made contact with this area of value, which was a weekly demand. Right, I'm on the daily time frame, and this is how far I go in these videos. Daily time frame. This is how far you should be going for the first 3 years of your trading. Believe you me, right? Believe you me, if you want to make your life easy and you just want to be a patient, profitable, consistent trader, take your time. Right, here's the daily time frame. Are you impressed with this demand? Not me. I'm not impressed. Why? There are a bunch of rules that I like to follow in my trading. There are a bunch of things missing. I can see a doji candle and for completely engulfed, and I can see price returning to that here, but it's very weak, right? So I don't want to sell right now, no, because we've made contact with a daily, weekly demand. I don't want to sell. But I definitely, oh, you see, this was when we touched the proximal line of the weekly demand. Now that I've narrowed this down to daily, price still has a little bit more to drop. On the daily time frame, it's become clearer and clearer what is going on. And what I mean by that is the final leg of price, where price is right now. We can start to make couple of assessment. Assessment one is we can say, oh, okay, cool, break of market structure. Where the structure breaks, there's always a significant overlay of interest, right? So if I'm going to break a bullish structure, a turning point in price, I better put more money than that was here. I better add more sell pressure than the buy pressure, right? So I'm not a betting man, but this is selling a little bit low on technically be classified as a high risk sell. I'd even go as far as saying slightly cowboy-ish, right? Slightly cowboyish, and the reason for that is it's low on the curve. It's not necessarily deep all the way up there. However, it is potentially a valid supply area, bearish engulfing pattern that is designed to almost make sure that price doesn't go far. Today's Friday, excuse me, as I make this video for you. Is it today Friday? I believe today's Friday. It feels like a Friday. Yeah, 14 should be a Friday. Yeah, it is Friday. So we can imagine that this action is going to continue into next week. So this is what you want to look out for next week. You want to see how price moves up. If price moves too parabolic, that means we don't get this type of sequence distribution, then don't try selling here. However, if we get some type of distribution, some type of sideways movements, or the common ones where markets create some type of liquidity just right above the zone, where markets make maybe say equal highs, then we get some equal highs going there. They trap the retail traders, they bring the retail traders down only to pump price back up. When they start to sell, we push back up and then we sell with them all the way down there. I would try for something like that if I was trading or if I was giving out trading signals, but I am not. I'm just getting a pulse of the market. Ladies and gentlemen, this is USD Swiss franc. It looks like, maybe I just need to make peace with 20-minute videos. I just want to make this short, quick, succinct. There's no clutter, there's no sentiment right now. We're just looking at charts. We're just looking at charts and understanding charts. We know the dollar is weak for whatever reason, and so this is selling, right? If this obviously breaks, please remember this is a very, very high risk sell. I already called it cowboy. Let me make it red so that when we come back here 10 days from now, people are like, this man. Why is this cowboy? Well, first of all, there are multiple supplies that are higher, number one. Number two, because there are multiple suppliers that are higher, any of them could be better for a multiple number of reasons when it comes to smart money. This area of value has already had a fresh touch and price dropped. I'm not going to include this because it's not a bearish engulfing pattern. And as an order block, it doesn't give me, according to my rules, sufficient reason to sell, right? So So anything is possible, right? Anything is possible. Keep it tight, keep the risk quite low here. And then the second thing that you need to be worried about is the fact that you're selling into a standing demand. Yes, the demand is weak. Yes, the demand is a complete violation and all those good things that we've said. But we really want to make sure that this demand gets taken out. If it doesn't get taken out, then you're looking at a risk to reward ratio of 1:2. Get taken out. Wouldn't it be beautiful that this green candle on Friday today becomes a new 365 candle? Wouldn't that be nice, right? So then something like this happens, and then you get the type of imbalance that you want that breaks structure, and then you wait for price to come back up for you. Right, so those are kind of like things you should be looking out for in USD Swiss franc. I hope that helped you. If it did, hit the like button. If you watched till the end, hit the like button. If you didn't like the video, hit the like button. But if you really loved it, please don't forget to subscribe and share. 365. See you in the next one. Cheers.